Hi, everybody. This is Dan Sheridan, and I'm taking a look at the market today, Wednesday, July 20th in the afternoon. I'm looking at what the market is telling me to do today. Well, what looks like a good trade today, maybe a range-bound trade. So I look at the graph here. This is a one-year price chart, looking at TD Ameritrade, Thinkorswim. You can see here we've got the 200-day moving average, and you have the 50. And for the first time in a while, yay, we've finally recovered a bit off some of the lows here in the SPX. We're above the 50 and some of the other shorter term moving averages. Right now, as we speak, SPX is around 39.58, up 21, and VIX is the lowest it's been in a while. It's 23.88. The last 3 months, the range has been about 20 to 35. So we're on the lower end of the range. So we have a lower VIX from what the range has been. Obviously, it's been a higher volatility for the last 6-7 months as we've been in this downtrend, culminating in kind of a bearish market for a little bit. And so it looks like we're recovering a little bit. I think it's too early to say we're out of the woods. And I think earnings the rest of the week will determine some of the shorter term activity. But based on this, what are some things I'm looking at? And one of the things I'm looking at, a couple different strategies. One idea would be a directional butterfly. And that's something we're actually first time ever running a course on that starting next week. You can check it out, SheridanMentoring.com, with a course starting Monday on directional butterflies. And to me, directional butterflies are like the preferred speculative strategy that has probably the best yield. And unlike buying a call or put or buying a vertical spread, it doesn't rip your face off if you're wrong. I just think it's a much more conservative way of playing a speculative strategy. But the key is you have to be, what's important with those strategies is picking the right duration and the right strikes. But an example of one would be, if you look at SPX here, and if we looked, again, you see on the chart, it's been going up. We'll also do a lot of this around earnings period. So we'll be, during a class next week, we'll be doing quite a bit around earnings. It's a neat strategy. But if you just look at the expected move in here a week from Friday, it's going to be about 125 points in the SPX. So even if I went up 100 points for next week, then we're at 39.58. Just showing an example of what one might look like. I'm just going to make it, so 100 points up from here would be about 40.60 for next week. And I'm going to make this about 30 wide. And we'll just make it one contract here. And you can see here, make this a little bigger for you. And this is an example of what one looks like. The current price as of Wednesday, July 20th here, we're around 39.57, down in this area. In the, just a little bit. So we're all the way over here in SPX. And here we are. If we continue up, there's kind of the expected move. And we're only one delta long on this trade. If we can get in this 40.30 through 40.90 range next week, you could see on an investment, I think the spread would cost around $2.50. Just put it here so we can analyze it. They're about $2.50. So $250, and you can see if we're in this range of 40.30 to 40.90, and if I just go ahead and put the date on, even go to today's Wednesday, if we go to Tuesday of next week, the 26th, see how this purple line goes up here. And you can make quite a bit on the investment of $250. This is just one contract. Normally, I'm looking to make about 40 to 50% on this trade, but this is a directional butterfly, and we'll teach you how we do that. And it's class next week, starting Monday, and another class that we've been doing for a year, probably our most popular class, 3K class, plan to make 3K and 25K. That's based on putting on trades, some butterflies, calendars, credit spreads, other trades, some directional speculative trades, and putting them on with a duration of maybe 15 to 30 days, 15 to 40 days. And we're limited that most of those trades, we put them on and off in a week. So you're getting a turnover every week of trades on the same capital. So our plan is we're looking at 3% a week, 12% a month. And we generally, we've got that in the June trades. We traded maybe a third of our normal size in June because of the rocky market, but we hit our yield targets on that. And I think getting better because the market's stabilizing a bit here. But one of the types of trades I'd be looking at for class next week, a trade I haven't done in the 3K class, but I think I'm going to talk about it next week, because we've dipped in the lower end of the range, 23 in the VIX now. Looking at a double diagonal, which is a alternative to I'll just show you the setup one, an alternative to an iron condor, same graph, when the volatilities are lower. So, and this would be the 3K class, that starts next Tuesday, goes Tuesdays and Thursday for 4 weeks, and all classes are recorded. The directional butterfly class starts Monday, goes Monday and Wednesday for 3 weeks. But here's an example of the double diagonal. I'll show you real quick. And I might go out, it depends, you might go out, here's going out 16 days, August 5th, so selling the August 5th, very similar to the iron condor. They both have the same foundation, selling an out of the money strangle. So I'm selling the August 5th, buying the August 12th. And at least in the current market, kind of the way I'm setting it up is I'm setting my short strikes. If we're at around 39.50-ish, I'm going at 39.60. I'm going up about 100 points. So on my short call, go up to around 40.60. And on my short put, around 39.60, go to 38.60 on the short put. Up and down 100 points. And then to get relatively delta neutral, on my long call, I'm going to go 15 points up from my short call. So go up to 40.75. And my long put, I'll go 20 points down from my short put. So that'd be 38.40. And let me fix this for you. And you can see date in here. You can see that's what it looks like, kind of a similar graph of an iron condor. You're selling an out of the money call here, the 4060 call and the 3860 put. Same foundation as an iron condor, except your long options are 1 week further out. So when the volatilities are a little bit lower, VIX is at the lower end of the range. I would rather be in this double diagonal. So this is something we haven't done in our 3K class. Again, starts next week, but I think as long as the volatility stay in the lower 20s, we're going to be plopping one on next week. And you can see it gives you a wide range here of profitability. And we'll talk more logistics next week. So anyways, just wanted to throw a couple things out at you and things we're thinking about. Again, the iron condor or the directional butterfly class starts this coming Monday. The 3K class, plan to make 3K on 25K, starts Tuesday. That goes 4 weeks. Check us out at SheridanMentoring.com and have a wonderful day, everybody. Thanks.